This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Taiwan hit by its biggest earthquake in 25 years, toppling at least 26 buildings, injuring dozens of people and disrupting air travel and manufacturing. We'll have a live update from Taipei. Stocks in Asia fall along with U.S. futures, while U.S. yields hit their highest levels this year as rate cut hopes fade. Brent approaching $90 a barrel. Plus, President Biden issues his strongest criticism yet of Israel's conduct in Gaza following the deaths of 7 aid workers in Israeli airstrikes. It's just gone 8 a.m. across the Emirates. I'm Vonnie Quinn in Dubai, and let's see how we're shaping up for a Wednesday session that's bound to be rife with geopolitical issues and concerns about Federal Reserve cutting. As you can see, futures pointed lower. This after 2 down days now for the S&P 500. It was down 0.7% in the Tuesday session. The Nasdaq 100 was down nearly 1% in the session. The worst performer there being Tesla after vehicle deliveries disappointed greatly. We'll hear from Fed Chair Powell later in the Wednesday session, but we already heard from Mary Daly and her Cleveland counterpart Loretta Mester. They're both still expecting the central bank to cut rates 3 times this year, but neither of them is in any rush to begin lowering borrowing costs. And of course, we do have traders pricing in fewer cuts actually than the Federal Reserve at the moment, still about 65 basis points. Gold holding a rally over the past 6 sessions, as you can see, at 2,285.55, and Brent crude just off its highs of the session so far, still above $89 a barrel. We got good data out of the US as well, and that's paradoxically hitting the markets. But we want to see how things in Asia are faring now after that earthquake hit Taiwan. Yvonne Mann is in our Hong Kong studio and has an update for us. Yvonne, how are markets reacting?
Well, for the most part, we're feeling in the chip sector, Vonnie, but if you take a look at how the TAIEX is doing in Taipei, we're actually taking things in stride. We're slightly on the downside. We'll talk about the chip impact in a little bit, but really what we're dealing with in the narrative in Asia is still what we're hearing from the Fed, as well as the dollar moves we've seen, the stronger data out of the U.S. that continues to push the Treasury yields higher. In fact, that U.S. 10-year yield hitting those 2024 highs of 4.35 right now. That certainly is roiling Asian currencies in particular. 725.15 for your dollar China trade here this morning. You throw better data, a stronger fix in the mix here, and we're not seeing any sort of reversal in this trade as of yet. It's still a Fed story right now. But right now, you take a look at what Taiwan is. You talked about the worst earthquake we've seen in 25 years. We have seen the corporate impact, in particular, the likes of Taiwan Semi, UMC. They're talking about halting some chip making, evacuating some plants after this major quake. Right now, they have moved some staff to other operation areas, but certainly this was something that rocked the city of Taipei and even the eastern part of Hualien City in particular. That's where we're seeing most of the damage here this morning. So you are seeing some of these chip makers feeling those effects here right now. Although you take a look at the SK Hynix, Samsung as well, there was also that Intel, the foundry business, posting losses that is also roiling a lot of these chip makers here today. I want to end you on this, though, to set you up for what's really going on in Taipei. When you take a look at what's going on with the map and why we're focused so much on the impact it has on manufacturing and the like. So we talked about where it's really being felt is the eastern part of the island here. Where you're seeing this yellow part, these blue and yellow dots here, that's where the industrial base is. That's where most of these foundries and factories in Taiwan lie. So you could say, geographically speaking, perhaps the impact of this quake might not be that long-lasting, but a lot of these companies right now are taking precautionary measures, Vonnie.
Yvonne, thank you so much. We'll continue to check in with you throughout the hour. That's Yvonne Mann there in Hong Kong. Taiwan, as Yvonne was saying, still assessing damage after its strongest earthquake in a quarter century. At least 26 buildings have collapsed, with more than 50 people now confirmed injured. Our Taiwan markets reporter Betty Ho joins us from Taipei. What more can you tell us about the assessment of the damage so far, Betty?
Right. So as far as we know right now, like you said, we've seen the government has already confirmed 50-plus people that have been injured, 20-plus buildings that have collapsed in the wake of this earthquake. I think right now what we know about deaths is that there has been 1 or 2 suspected deaths reported by the government, but as of now we are not sure if those we cannot confirm for sure that if those suspected deaths are already they are actual deaths right now, as of now. In terms of the companies, as you mentioned, so chip makers, TSMC has said that they will. They have evacuated some of their staff to keep them safe, and then some of the other tech suppliers in Taiwan are also evaluating the impact of the earthquake. That's what we know as of now.
And then, Betty, there was a tsunami warning, and it included also Japan. What do we know about what's happening with aftershocks and also the potential for tsunamis?
Right. So in terms of aftershocks, we have felt several aftershocks in the following 20 minutes to an hour. After the first earthquake hit in Taipei, the Taipei weather officials reported that the aftershocks, one of the biggest aftershocks that we've seen in Taiwan, it has the scale of 6.5. So it is still quite significant, and I think the government has also warned that in Taiwan, people should be aware of other aftershocks in the following later today and in the day after. So I think the government and people are all closely monitoring the situation right now. And as of Japan, I think right now the impact outside of Taiwan is still limited. So I think that's something that the governments elsewhere are also looking at.
Betty, thank you so much for the update. We will check in with you a little later on again. Our Taiwan markets reporter, Betty Ho, there in Taipei. President Biden says Israel is not doing enough to protect civilians in Gaza. That's after the Israeli military killed 7 aid workers, among others. Those aid workers included an American in airstrikes. Bloomberg's Paul Wallace joins us now for more. Paul, could this be the bridge too far, as it were, the leverage that President Biden needs in order to get Benjamin Netanyahu to perhaps reconsider an invasion into Rafah and what's happening in Gaza?
I think that's what a lot of Israel's allies might be hopeful about, that they really want to stop this planned offensive on Rafah by the Israelis. It could be a turning point. 7 people killed in this strike, obviously outrage, or the US says it was outraged by it. A lot of criticism from the likes of leaders in Australia and also Rishi Sunak in the UK and Poland too. All those countries had nationals among the 7 killed. So that remains to be seen. However, as we've been saying for a long time, Israel is absolutely adamant about Rafah, and Benjamin Netanyahu has said time and time again that nothing will stop him sending forces into the city, where he says Hamas still has several thousand fighters.
We have a story today saying that this war has destroyed about $18.5 billion worth of infrastructure in Gaza, and obviously, 74% of Palestinians are unemployed, at least, right? And there's a huge amount of infrastructure that might take years to even begin to rebuild. We're not even getting to talk about that yet, right? Because we haven't even seen a peace process work. I mean, how long is the estimation for when Gaza will start to look like Gaza again, if ever?
This is a big question, and the Gaza Strip has been absolutely devastated by this war, as you mentioned, even beyond the death toll. According to this report that the World Bank and others were involved with, close to $20 billion worth of damage has been seen in the territory. The question about what happens when fighting stops hasn't really been answered with any clarity by Israel. I think that's because Israel is just so focused on trying to wipe out Hamas as a military organization. Some Israeli officials have talked about Arab states sending in peacekeepers and the likes of Saudi Arabia and the UAE funding Gaza's reconstruction, but it's extremely unclear that any Arab state is going to be willing to send peacekeepers into the Gaza Strip, especially if Israel is not willing to start negotiations toward a 2-state solution with the Palestinians. So in terms of what happens, we have very little clarity.
Yeah, if the parties would even agree to that. Paul, thank you so much. That's Bloomberg's Paul Wallace there with an update on the Israel-Hamas war. Meanwhile, President Biden and his Chinese counterpart Xi Jinping have spoken by phone in their first one-to-one communication since November. For more, let's bring in our China economy and government reporter, Lucille Liu. So what stood out to you in these talks that we know of, Lucille?
Hi. I mean, so this was the big laundry list of, consistent concerns the two sides have had, touched on everything from military to Taiwan and to AI to fentanyl to trade. So it really covered all the bases. It's a continuation of really that stability that the two presidents tried to establish in November at APEC. So we're seeing more conversations, but of course, in terms of what comes out of them, there hasn't really been a result. Although, of course, we are seeing positive things like those talks in trade, like those talks in terms of fentanyl continue. So there are some positives, and of course, everyone agrees that talking is better than not talking.
The Treasury Secretary, Janet Yellen, she's visiting China this week. Is it possible that that will move the needle on any issues?
Yeah, absolutely. I mean, I think the big headlines are about she's going to press China on overcapacity. But of course, we've already seen in, Chinese policy meets. We had the 2 sessions earlier this year. We had the premier speak at an event to foreign CEOs very recently. There just doesn't seem to be this acknowledgement that, China really sees its industrial policy as threatening or as an issue for, global markets. And so there does seem to be a disconnect there. But especially with China sort of doubling down on its manufacturing emphasis. We're not seeing a lot of consumption side stimulus. So certainly this is an ongoing issue and something that Yellen's visit will highlight in terms of will there be concessions from the Chinese side? I mean, we're not really seeing hints of that yet, but certainly looking forward to this visit this coming week and over the weekend.
Lucille, thank you so much. That's our China economy and government reporter, Lucille Liu in Beijing. Tesla shares tumbled after the EV maker's first quarter deliveries missed estimates by the biggest margin in 7 years. Tesla shipped just under 387,000 vehicles compared with the average estimate for 449,000. Let's get more from our Asia transport reporter, Linda Liu. So more than 60,000 short, Linda. What caused the shortage?
It really was a whole range of factors, starting with the softening global EV demand, as well as really intense competition in Tesla's second largest market in China, where you've got more than 100 EV players launching, hundreds of products into the market, as well as supply chain disruptions, such as from the Red Sea Houthi attacks, where it's led to the Berlin factory production being affected. So all of these have added together to paint a really bleak picture for Tesla's first quarter deliveries.
Well, and it's a little ironic that it's coming in the same week that BYD reported sort of, record or at least equivalent to Tesla first 24-hour orders, right, for their new EVs. So Tesla has to be careful, particularly in that region.
Yeah, so Tesla's biggest rival, BYD, has done really well for March, where their sales increased 46% compared to last year. That brought their first quarter deliveries of plug-in hybrids as well as EVs to over 600,000 vehicles. The interesting thing is, even though BYD is doing really well overall, their specific electric vehicle production and sales has gone back down below Tesla for first quarter. So BYD sold about 300,000 EVs in the first quarter compared to 386,000 from Tesla. So now Tesla is back to being the world's largest EV maker.
Linda, thank you so much. We'll be watching that stock closely today. That's Bloomberg's Asia transport reporter, Linda Liu. Just want to give you an update on the Taiwan earthquake. The fire services are now saying at least 4 are dead from that quake. Again, Taiwan Fire Agency saying at least 4 dead from the quake. This is the biggest earthquake that has hit Taiwan in 25 years. 7.4 magnitude as measured by the USGS. We'll continue to keep you updated. Plenty more still ahead. This is Bloomberg Middle East and Africa.
that is a very reasonable baseline, but I would like to say here that this is a projection, right? 3 rate cuts is a projection, and a projection is not a promise.
San Francisco Fed President Mary Daly there. Solid U.S. economic data adding to doubts over the pace of monetary easing. As you can see, the 10-year yield at 4.3511, its highs of the year now, and you could say that across the curve, in fact. So let's bring in our guest to talk about this. Doug Grenig is CEO and CIO at Florin Court Capital. So Doug, thank you so much for joining. I know that you think overstated is a word that might describe the conversation around inflation at the moment. But yet we've got better data again yesterday in the United States session, and now we have Mary Daly and Loretta Mester both saying, no, we're still on for potentially 3 cuts this year. What's your thesis on why inflation is overstated?
Well, CPI inflation has the shelter component comprising 40% of core, okay? And I think about 25% of the total. And shelter inflation is mismeasured in the CPI. They use something called owner's equivalent rent for the majority of it. And it's stale by about a year. This is a point my good friend, economist Cam Harvey, has made repeatedly. The actual inflation rate, CPI inflation, is now below 2% if you substitute a more real-time estimate for shelter inflation using rent.
OK, so that's the shelter component, but the Fed has said that it's watching services, and that's been incredibly sticky and isn't coming down. We haven't seen it come down at all. That has to factor in, plus the fact that now we're seeing oil rise and we're nearly at $90 a barrel on Brent.
Well, the Fed, it's appropriate for them to be cautious, but services inflation is always more sticky than other forms of inflation. And if you look at things like core PCE services ex housing, that's been steadily trending lower. And that's Powell's favorite measure. It's down at around 3% now, but it's been trending lower pretty consistently. The U.S. economy is in shockingly good condition, considering the amount of monetary tightening that was done. So how many cuts this year? I think 2, maybe.
And when does the rate cycle start?
June is 50-50 in the opinion of the market, and I think that's probably okay, but it might be later.
Now, I know you don't consider yourself a stock picker, and you're more of a quantitative research firm. Where, though, are you liking right now? What parts of the market, what pockets of the market do you see some value?
Well, on a macro level, we're a macro quant fund. And on a macro level, we're constructive about risk assets in general, including equities, but especially U.S. equities. That's something that looks very attractive, and credit as well. In addition, we're short electricity in Europe. Again, there's a process of deindustrialization, a weak economy, a tremendous supply of nat gas, as well as high renewable supply. I'm certainly personally very constructive on gold and other hard currency substitutes.
Well, certainly we're seeing, continued records for gold these days. What about China? I know that you say extreme views on China are just not constructive here.
Yeah, it's really good to take a look in the mirror, because we're frequently hysterical on one side or another. We kind of cycle through mania because China has just such a tremendous scale. And at other times we're sort of paranoid because it makes the Western world uncomfortable that a peer competitor has organically emerged. And then we get depressed and unhappy about China because their system is different from ours. The reality is they have tremendous resources. For years we talked about excess savings in China and how it distorted world markets. So they have a very, very deep pool of savings. At the same time, the economy really needs to be transformed because the old growth engines, which is just building more infrastructure, exports, urbanization, and so forth, those things are kind of running out of road. And so we're going to be moving toward a more consumption-oriented, high-tech, digital, value-added economy in China. And the authorities are trying to get there in the midst of a sort of property slump.
So we have seen a run-up in the Hang Seng Enterprises Index this year, about 16% plus. So that's, one sign. But there's also been this narrative percolating in the market that perhaps Japan has been overdone, maybe even India, and that some of that money will go into China. Do you anticipate that?
I don't know. I don't know. One thing is clear. Pessimism got too extreme. Back to my cycle about our extreme emotions. And China is going to be big and is going to be important. However uncomfortable it makes some folks in the West. It's too important. And right now they are relying very heavily on infrastructure spending to keep that GDP up. And, that's not ultimately where they want to be. But I think pessimism got overdone, and I think probably we're going to see a reversal to a degree of some of the negative flows and news.
Doug, thank you so much for joining. Much appreciated. That is Doug Grenig. He is CEO and CIO at Florin Court Capital. Plenty more still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. Just want to give you an update on the earthquake that hit Taiwan earlier today. At least 4 dead, according to the fire service. Taiwan Fire Agency saying at least 4 dead from the quake. Damage is still being assessed, of course, and we are anticipating hearing from officials in the next few hours. But again, at least 4 are dead. We know at least 26 buildings have been toppled and at least 50 people injured in that quake. Tsunami warnings were also issued. One has been revoked for Japan. Well, another story we're following. In Turkey, a fire broke out at a nightclub in Istanbul during renovations, killing at least 29 people and injuring at least 3. The club was on the ground and basement floors of a residential building, and all the dead were reportedly workers at the site. The fire was extinguished later on Tuesday. We did get some economic data out of this region. March S&P global PMIs for the UAE coming in just a little bit under expectations. Still in expansionary territory, though, 56.9 versus 57.1 in February. For Saudi Arabia, the PMI came in at 57. That was just a little lower than the February reading. And the Dubai March PMI 58, again, just a little lower than the February reading. So we'll see how markets react a little later. This is how they closed in yesterday's session. As you can see, the Tadawul was up 0.4% higher for a second day, led by materials there. The DFM General Index in Abu Dhabi, little changed, up just about 0.1%. Banks contributing most there to the gains, Abu Dhabi Commercial Bank in particular. And the DFM, well, it was up fractionally for a 4th day. Just the Qatar Exchange Index down 0.7%. Stay with us on Bloomberg. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Taiwan hit by its biggest earthquake in 25 years, toppling at least 26 buildings, injuring dozens of people and disrupting air travel and manufacturing. We have a live update from Taipei. Stocks in Asia fall along with U.S. futures, while U.S. yields hit their highest levels this year as rate cut hopes decline. Brent approaching $90 a barrel. Plus, President Biden issues his strongest criticism yet of Israel's conduct in Gaza following the deaths of 7 aid workers in Israeli airstrikes, among others. It's just gone 8:30 a.m. across the Emirates. I'm Vonnie Quinn in Dubai, and we want to get straight to Asia now and check in on how markets are reacting to that biggest earthquake in 25 years for Taiwan. Yvonne Mann is in our Hong Kong studio. Yvonne.
Yep, obviously we're not discounting the human impact of all this, as you talked about, at least 4 deaths now being reported from the AP. But you are seeing, when it comes to markets, taking this in a bit of stride here this morning. TSMC certainly is the one that you're seeing the bottom of your screens there. We're down some 1% after they did mention that they are going to be halting some chip making, also evacuating some plants after this major quake. As you said, 7.4 magnitude is something that we haven't seen in more than 2 decades. So certainly that's what we're feeling here this morning. morning. You take a look at how broader markets, so we are seeing a bit of risk-off moves here. Obviously, what we've been seeing when it comes to these rate cut bets being faded. The first time in a while we've seen actually bond traders price in less cuts than the Fed projects in the dots, right? So that's why we're continuing to see that sell-off when it comes to U.S. Treasuries. We're back to those 2024 highs when it comes to that U.S. 10-year yield. Oil prices are also elevated. We're punching close to $90 for Brent now. So that's obviously keeping the Fed up at night, too, in terms of the upside into inflationary pressures. And so we're seeing stocks on the back foot here, on the back of U.S. futures as well. We're slightly lower here this morning. And that just adds more fuel to this dollar trade in particular. We're back to those 2024 highs for the Bloomberg Dollar Index, also for the dollar index as well, and is adding pressure to the likes of basically most Asia foreign exchange. You take a look at the yen. The renminbi certainly is not immune to that. You take a look at how the onshore rate is looking like. We are now approaching the PBOC's upper limit of around that 2% trading band, right? So we have seen the offshore rate actually break above that for about 8 sessions now. We actually have seen some traders talking about how they've seen maybe some block trades being, some swap trades being blocked. Maybe is a sign that perhaps we're getting very close to that weaker end of that band right now. And it just goes to show how there's a lot of depreciating pressures out there here, despite stronger fixings from the PBOC, despite the macro backdrop actually looking better. Data actually has been turning more positive of late, Vonnie. We still have that jobs report on Friday. China goes into a long weekend here starting tomorrow, so certainly we are likely to see a bit more pressure moving forward.
And Fed Chair Powell speaks later Wednesday. Yvonne, thank you so much for that. That's Yvonne Mann there in our Hong Kong bureau. Oil holding onto a rally after an industry report pointed to a drawdown in U.S. crude inventories and ahead of an OPEC Plus meeting at which the group is expected to affirm current supply cuts. Joining me now is Bloomberg's energy and commodities editor Andrew Janes. Andrew, we've seen this rally over the last few days and we're close now to $90 a barrel on Brent, even though we know that OPEC Plus is already not meeting those supply quotas and the globe seems to be awash in oil. Why this rally?
Hi, Bonnie. Yeah, I mean, there's a number of things behind the rally. We obviously have OPEC Plus set to affirm its reductions through the end of June. We've also got, continued problems with shipping due to the Houthi attacks in the Red Sea, which have been adding transport costs. We have Ukrainian attacks on Russian refineries. And then we have the summer driving season in the US, which is getting closer. So a number of things sort of supporting prices. If you look at some technicals, the market's moving deeper into backwardation. That's when near-term prices are higher than those further out. That's generally a signal that supply is tightening and prices are going to go up. We've even had JP Morgan Chase predict fairly recently that prices could go to $100 a barrel by September. Not sure if they'll get that high, but there is definitely a number of factors that are pushing up prices at the moment. We've also had a bit of positive news, macro news out of China recently, although Chinese demand does remain a bit of a big unknown there for oil prices. And then we've also got sort of still strong supply out of the non-OPEC countries, which is keeping prices from moving really high.
A brief word on gold, if you would, Andrew, as well, because we are seeing continued records for gold. I mean, does that continue until we get the first rate cut and the rate cutting cycle begins?
Yeah, well, I mean, this latest little leg higher for gold seems to have been driven by comments from Fed policymakers that 3 rate cuts are still on the cards. But, gold's been on a tear since mid-February. The sort of the expectation that the Fed's moving closer to this much anticipated pivot has been underpinning that rally, but it's also been driven by a number of other things. We have elevated tensions both in Ukraine and the Middle East. We have a lot of buying out of China, and that's both from the central bank and also just from regular consumers who are very concerned about a number of sort of things in the Chinese economy, like the property downturn and the collapse in stock prices we saw earlier in the year. So yeah, we've got a number of sort of things driving gold. Even further out, of course, we've got the US presidential election in November, which could be massively destabilizing for markets. So a lot of positive factors driving gold. It is possible that it could be headed for a pullback if we get indications either via comments or from data that that sort of scenario for 3 rate cuts in the US is looking less likely.
All right, Andrew, we will keep an eye out for that. Again, Fed Chair Powell speaking later might give us another signal. That's Bloomberg's Andrew Janes. Thank you. And joining us now is Monica Malik, Chief Economist at Abu Dhabi Commercial Bank. So, Monica, Andrew just telling us there about, why we're seeing records for oil. And I'm just curious as to how much you think this is going to add to the Fed's inflation problem.
Well, at the moment, I think at this level, the pressures are relatively contained. We estimate that Brent crude will average around $83 a barrel, broadly in line with last year. So while we don't expect to see the same drag to headline inflation in the US or globally from lower fuel prices, at the same time, it's not going to add that much inflationary pressures. And I think this is something that OPEC Plus will look at carefully. Of course, there's from their side the tightening in fundamentals, but they will not want oil to sustainably move to a level that will destabilize the global economy, add to inflationary pressures, and reduce the chances of rate cuts from mid to the second half of the year. So oil will play a central part. But at the moment, there are still some uncertainties, both vis-a-vis demand. We're seeing support from geopolitics, and this is uncertain as well. So we expect a wait-and-watch approach.
Obviously, OPEC Plus is pleased with these prices. The Joint Ministerial Committee meeting later today expected to affirm the production cuts but not extend them or anything like that until June at least. But at the same time, they're not meeting them. So why, what could we expect sort of from future meetings, if you like, Monica? What will the conversation be today?
I think a lot of the conversation will be looking at individual targets, looking at who's producing and the production levels against target levels. So that will be number one critical point. Russia adds a degree of uncertainty as well, because, of course, we've seen those attacks on the refining installations, but they have also come out and said that they are going to cut production and exports to move in line with their commitments to OPEC Plus. So I think that will be an area of discussion. And I think, again, the critical point will be where are the fundamentals. We believe that the oil market turned into a deficit in February. The production cuts were central to that. And where is the demand outlook? And as you know, OPEC forecasts for demand are significantly stronger than the IEA's. So I think that'll be another area of focus as well.
Monica, I want to make just a little bit of a hard pivot here to Egypt because, of course, we saw President El-Sisi sworn in and he's now going to serve until 2030 at least. What is your outlook for that economy given the $50 billion injection that it's presumably going to see over the next several years?
Well, really, this injection and starting off with the Ras Al Hikmah deal with the injection from Abu Dhabi, this is really a game changer. It gives significant FX liquidity to meet Egypt's funding requirement for the next 2 to 3 years. We've already seen a change in market sentiment, so the access to foreign capital, the flows into Egyptian debt, that has picked up as well. Yesterday, you could see the impact of the FX inflows on net foreign liabilities in the monetary system and how it's helped reduce the net foreign liabilities. So I think it is significant. What will now be critical will be the structural reforms that follow, and that is both to to reduce the current account deficit sustainably, improve the competitiveness of the economy, and especially on the fiscal front, reduce the debt levels, reduce government funding requirements and debt costs. And central to this also will be to increase the primary surplus.
Monica, we do have to leave it there, but we're going to continue this conversation. So thank you so much for the context and for joining us today. Monica Malik is Chief Economist at Abu Dhabi Commercial Bank. So then, Egyptian President Abdel Fattah el-Sisi has been sworn in for that third term. Expectations are building for wide-ranging changes after that international bailout warded off the country's worst economic crisis in decades, as we heard Monica explain to us. Joining us now for more context is Bloomberg's Ziad Daoud. So what are the key challenges beyond what Monica was talking to us about facing President Sisi now? What does he need to do in order to make some changes?
Well, he's got two big challenges. He's got a security challenge and he's got an economic challenge. On the security side, there is a civil war to the west of Egypt in Libya. There's a civil war in the south, to the south of Egypt in Sudan. And there's a raging war in Gaza, which has been going on for the last 6 months. So obviously he has to deal with that. And there's the economic challenge. President Sisi came to power, became president in 2014. Since then, the pound has lost about 85% of its value. Inflation has, on average, been in double digits and is currently running at 36%. And external debt has risen from 14% of GDP to around 40% of GDP. So obviously there is a big economic challenge that the president needs to address in his new term.
Well, there is this infusion now of $50 billion from various sources, $35 billion from this region. What should he do with that money in order to get the most efficiency out of it?
Well, there's a few things, right? So the more than $50 billion of support to Egypt is enough to ease a lot of the dollar shortages in the short term. But there are long-term challenges in order to avoid another crisis in Egypt. And I think there are 4 things that Egypt needs to do in order to not repeat the crisis just gone through. First thing, it needs to reduce its reliance on hot money that could come in very quickly, but could also leave very quickly. The second thing, it needs to stop building infrastructure and capital that doesn't have an economic return. It doesn't make sense to borrow money from abroad to build stuff that doesn't generate economic return. The third thing, which the IMF has emphasized actually in its latest statement, is to reduce the role of the army in the economy. And the fourth thing is to allow for a flexible exchange rate, because a fixed exchange rate covers over all of these cracks. Some of these things are easier to do than others, so let's see if they can be delivered.
Exactly, and you need a good team around you as well. Now, net foreign assets into Egypt's banking system spiked in February. What was behind that, Ziad?
Well, let's just take a step back. So what is happening is the banking system in Egypt, which includes the banks and the central bank, have fewer dollars than they owe dollars. And that gap was so large in January, it reached $29 billion, which is probably the largest historically. And then in February, that number dropped to negative $22 billion. So that was an improvement of $7 billion, which suggests that the injection of money into Egypt is actually going to cover this gap. And it's important to cover this gap, because if you have a currency depreciation and you have a banking system that actually has more dollar liabilities than dollar assets, the depreciation would actually create a gap in the bank's balance sheet, to create losses. And it's important to cover these losses. So we've seen an element of that happened in February. And that should also probably continue the next time we get the numbers for March.
Ziad, thank you so much. That is Bloomberg's Ziad Daoud joining us there on Egypt. Plenty more still ahead. Do continue to stay with us on Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. So we have a new president in Senegal. The new president becomes Africa's youngest elected president, less than 3 weeks after being released from prison to run in last month's election. For more, let's bring in Ondiro Oganga now, who joins us from Kigali. So President Faye's economics policies are quite different from former President Sall's. What can investors expect, Ondiro?
investors can expect to have a president in Bassirou Faye. Ever since elections were finished and it was declared that he had won the elections, he's almost adopted a presidential tone. We're seeing him speak more as a leader instead of people in the opposition. He says he wants to continue the working relations that Senegal has with its foreign partners and also deepen those foreign relations. He will continue with his sovereignty agenda because he wants the best for Senegal, but he also understands that partly renegotiating those contracts is not what's good for Senegal because most of these oil and gas projects have already delayed, and going back to the renegotiation table then delays it even further. What they're going to do is they're going to look at these contracts individually and try and find opportunities where the country can make more revenue, because the goal is to ensure that Senegal's resources yield more revenue for the people. Investors are optimistic. Cosmos is hoping to have a business-friendly environment in Senegal, and we also have BP who say they're hoping to build a conducive relationship with the president as they did with the former president.
For sure. And then as President Faye begins his term, Ondiro, what would be top of mind for the local Senegalese people?
For the young people who rallied in their masses to vote for him, all they want is jobs. There's a serious unemployment problem in Senegal. 20% could be higher, and many are risking their lives traveling the oceans and the deserts to go to Spain to look for jobs. And these are tertiary graduates. So what they want top of mind is, one, the government needs to create jobs in a conducive environment so that the private sector can thrive. What they'll also be looking for is infrastructural development. They want hospitals, they want schools, but also the government has to work towards getting their oil and gas projects off the ground because, as IMF had predicted, this will catapult economic growth of about 8.3%. They're also looking towards a reduced cost of living. The cost of food and fuel is on the rise, and many in Dakar, Senegal, have expressed their discomfort. So this is some of the issues that the people of Senegal will be looking to Bassirou Faye to do in his first term in office.
Ondiro, thank you so much there. Bassirou Faye, sworn in now as Senegal's new president. That's Bloomberg's Ondiro Oganga in Kigali. Thank you. And this Friday, Africa Amplified takes a deeper dive into the historic rise in cocoa prices and why the same factors are impacting other soft commodities on the continent. Don't miss it. That's at 9:30 Dubai time, 6:30 a.m. Johannesburg time. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. U.S. Treasury Secretary Janet Yellen heads to China this week, aiming to press Beijing on what she says is a build-up of industrial overcapacity that's distorting global prices and production patterns. But those claims are not all backed up by the data. For more, let's bring in China economy editor James Mager. Yellen will have to have a very diplomatic tone if that's what she's trying to bring as a message, James. But what do the facts actually suggest?
It depends on which sector you really look at, whether there is that, whether the data is actually showing there is overcapacity in China's industrial industries. Obviously, if you're looking at the housing sector, things like cement or production of rebar, windows, paint, fridges, all the things that go into building a house, there's massive overcapacity. Cement production seems to be running at about 30% capacity utilization last month, which just shows how much of a slump there has been in housing construction and overall construction in China. And it's a similar story with steel and all the other things that go into building houses. But not a lot of that actually is exported. I mean, cement is not even a tradable good. Mostly it's produced locally and used locally in a country. And so, even if there's massive overcapacity in Chinese cement demand or in rebar, that doesn't get shipped overseas and undermine prices and jobs in other countries. It's a bit of a different story if you look at other parts of the economy, though. Obviously, the big one that everyone's talking about now with the EU, with their investigation into Chinese subsidies, is EVs. But again, the data doesn't really show there's massive overcapacity in EVs right now. Most of the EVs that China produces are still sold here, and it's a small but growing portion of the EVs that are being exported. But those are actually being exported and sold at much higher prices than they get sold domestically. There is real overcapacity, it looks like, in traditional cars, petrol and diesel cars. But at the moment, at least, a lot of that is being exported to Russia, and it's replacing exports from Western countries or from Japan and South Korea, who are no longer willing to export cars to Russia because of the war in Ukraine. So, depending on which sector you want to look at, there is issues. Obviously, steel and aluminium have for years been sectors in which other countries have complained about China, and you are seeing a bit of a pickup in Chinese steel exports. So there are things that Janet Yellen can point to and say that China has these problems. But massive overcapacity across the whole of the industrial sector is just not backed up by the data that we're seeing.
Yeah, absolutely. I mean, Beijing has said it wants to curb overcapacity too, so she won't be bringing a message that Beijing doesn't already, know about, that it isn't aware of. James, thank you so much. Much appreciated. That's China economy editor James Mager in Beijing. I want to give you an update on that Taiwan earthquake that hit just a couple of hours ago, 7.4 magnitude on the Richter scale as measured by the USGS. It is the worst earthquake in Taiwan in 25 years and has leveled at least 26 buildings. We also know from the fire services that at least 4 people have died. Earlier, we heard that at least 56 people were injured. Assessment, of course, continues, but it has disrupted some manufacturing, obviously, as well, happening in the early hours of the morning. We have seen the likes of TSMC pull away their workers from some factories. It did happen on the east of the island, though, and many of the factories are on the west, so we will continue to watch for some of the fallout, as it were, from this earthquake. There had been a tsunami warning as well, but also issued for Japan. That was revoked. Japan is no longer under a tsunami warning, and we are waiting to hear from Chinese and Taiwanese officials on the worst earthquake in 25 years. Plenty more still ahead. Do stay with us. This is Bloomberg taking you through the European Open in the next hour.